does that imply that only Tesla really has escape velocity in this industry right now? Because Rivian seems relatively far along. You did mention Ford, but that's obviously a different mix.
Yeah, I think Tesla's the clear potential winner here. They have the production, they have the scale with Austin, with the gigafactories. Ultimately, traditional auto's in a tough spot.
In this video, Tesla stock surges above $900 per share. Gene Munster says Tesla has won, and Legacy Automotive starts with and ends in UCKED. And the big news of the day, the US House of Representatives has passed the Inflation Induction Act, which includes a $7,500 tax credit for EV purchases, which will unfortunately force Tesla to make many additional billions of dollars in obscene profits, as they will have absolutely no choice but to significantly raise the price of their vehicles to avoid their already ludicrous wait times blowing out even further. And on that note, Tesla's wait times have now reached such a ridiculous point that they have literally stopped taking new orders for some vehicle models. Seriously. So, let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. In a series of entirely unpredictable events that literally nobody on the planet could possibly have seen coming, especially nobody on Twitter and or YouTube, Tesla stock has surged higher still, closing over $900 per share, up almost 5% today. And as I said, in the 600s, 700s, and 800s, and as I will continue to say into the 900s, 1000s, 1100s, 1200s, and new all-time highs, still, in my opinion, the best risk-adjusted opportunity that I am personally aware of in the stock market. Just to put things in context, over the last 1 month, Tesla has surged over 25%, yet year to date, still down about 25%. No further comment necessary. Looking at the wider market today, Apple stock up over 2%, Amazon stock up over 2% as well, Alphabet stock also over 2%, Rivian stock down a tiny bit, UCKED stock up 3%, the bell curve up 2%. By the way, if you haven't heard, current CEO of Nikola on his way out. For some reason, abandoned ship is coming to mind. And lastly, ARK's flagship innovation ETF up almost 4.20%. Plenty of green today. And now onto some very quick comments from stock analyst Gene Munster regarding Tesla and their so-called competition, both in the form of Legacy Automotive and EV startups.
We are back in overtime. Rivian shares bouncing off their OT lows following results. The company's call kicks off in less than 20 minutes. Let's bring in Gene Munster, managing partner at Loop Ventures. Gene, good to catch up with you on Rivian, which is a fascinating story. I mean, clearly, market's saying this company has a viable future. The deliveries are coming through in decent amount. The issue is, it's, again, a $30+ billion market cap. When Tesla had that market cap several years ago, it was already producing, I think, 4 times as many cars.
Okay, hold up a minute here. We've got to talk about this. The idea that Tesla was producing around 4 times as many vehicles as Rivian when they were both around a $30 billion market cap, let's fact check this. I'm not saying it's wrong, but this is some important context. So for those who don't know, in Q2 2022, Rivian produced and delivered approximately 4,400 vehicles. Great effort. Let's put that in context. What we're looking at here is Tesla's end-of-year market capitalization going back a decade. So, 2012, call it $3 billion or so. 2016, ending the year about $35 billion. So let's be generous and call it 2016. What did Tesla's Q2 2016 production look like? About 18,000 vehicles. So this was a pretty accurate statement. At the same market cap, around $30 billion, Tesla was producing 4 times as many vehicles. But wait, there's something else that we need to discuss. You see, Tesla's market cap has actually fluctuated quite a bit. Let's have a look at the chart of Tesla's market cap over time. As we can see here, in 2016, give or take, Tesla floating around that $30 or so billion market cap, bumping up and down obviously, but there's something interesting to note on this chart. If we fast forward to 2019, in May, Tesla's market cap back around $30 billion. One more time. In mid-2019, I don't know if you're good at counting, but we're in 22 now, so let's go backwards. 21, 20, 2019. Just over 3 years ago, Tesla's market cap just over $30 billion. How many vehicles did Tesla deliver in Q2 of 2019? Well, it turns out when Tesla was most recently around a $30 billion market cap, Shout out to the bell curve. They produced and delivered around 90,000 vehicles. Conservatively, about 20 times more than Rivian at the same valuation. Now, you could argue, well, Tesla shouldn't have been that cheap, and I completely agree. I was loading up hand over fucking fist. Tesla stock back in mid-2019 at this point with about a $30 billion market cap. I don't know if there'll ever have been a greater bargain in the history of the stock market. So it's true, when Tesla first touched a $30 billion market cap, they were producing a mere 4 times as many vehicles as Rivian. Literally 3 years later, Tesla's market cap was back in the same area, despite the fact that they were producing and delivering significantly more vehicles. So the question I have is, back in mid-2019 with Tesla's market cap around $30 billion, producing around 90,000 vehicles a quarter, where were the Rivian stock investors then? No, really, where were they? It seems, just based on my personal opinion, that Tesla back in 2016 was a better deal than Rivian is today. And in 2019, it was not only a better deal, it was the best deal that ever existed in the history of deals. But of course, it's not like I was buying Tesla stock back in 2019, so my opinion isn't worth much, is it? Oh wait, no, I was buying Tesla stock back in 2019 with literally every spare cent. In fact, on screen now, full disclosure, every transaction I made, all purchases of Tesla stock in 2019. We can see here, March, April, and May, I went ham. This was literally all the money I had available in case of emergency. Tesla stock in the 50s, then the 40s, then the 30s was literally the emergency of all emergencies. So I loaded up hand over fist. Irresistible bargains. Now, I have a funny feeling, and it is just a feeling, but that's all I've got to go on, that literally every single current owner of Rivian stock didn't buy Tesla stock back in 2019. I could be wrong. Oh, hang on, breaking news. Sorry, I'm producers in the air. Apparently, we have some footage or something about a Rivian's retail stock investor on screen now. I definitely don't understand what this means. Let's move on.
Where's the market opportunity relative to the business opportunity that Rivian sees right now?
Well, you still have to look 2-3 years out, Mike. And one difference between Rivian and Tesla, at the time Tesla had $700 million in cash and was potentially going to lose all their cash. In this case, Rivian has $15 billion. The market cap is just over $30 billion, so we're 44% in cash at this point. So I think the dynamic is a little bit different.
The dynamic certainly is different, but I do want to talk about this a little bit. On the surface, you might think, oh wow, $15 billion, that's so much cash, they're not going bankrupt, great. But here's a problem, and it is a big fucking problem. If you, as an EV startup, an extremely capital intensive business, have a stupid amount of cash available to you, and I mean a ridiculous amount of cash, what are the odds that by this very fact, you're less likely to be as resourceful as you could be, more prone to waste and excess? What does this do to the DNA of a company who, rather than having to fight tooth and nail to scrape by, to be ultra resourceful, lean and efficient, instead are like, well, fuck it, we got $15 billion in cash, whatever. What do you think that does to the DNA of the company moving forward? A company that hasn't been fighting for their life every inch of the way. My personal belief is that this is not going to be helpful to Rivian over the longer term. The more cash you have, the easier you can cover up poor decision making over the short term. Kind of like the kid born with a silver spoon in his mouth. Odds of turning out into an entitled wanker with literally no perspective, no understanding of hard work and sacrifice, fairly high. There are exceptions to the rule, but they are exceptions.
And the way I would kind of scope out the long term is, does this company have the muscle for escape velocity? And the answer is, these results would say we're not quite there yet. The most powerful part of these results is that they got $15 billion in cash, and that's an important piece in a relatively small workforce, which is more scalable relative to other car manufacturers. I think that's a big point. The piece that, two things that jumped out to me on the long term, Mike, was first, they reiterated that 25,000 delivery expectation, but the second on the negative was the pre-order number, 98,000 pre-orders. It was 90,000 on May 9th. And that is a modest step up. Just to put some context around this, is that Tesla Cybertruck, it's over 1 million pre-orders. I think it could be even close to 1.5 million.
Interesting data point. Give or take, Tesla Cybertruck with about 10 to 15 times as many reservations as Rivian. Nothing to see here. Move along.
I think Ford, they might have stopped the Lightning at like 250,000, but 98, going from 90 to 98 just isn't enough meat there. And to bring it all together, I still believe that Rivian is going to find their way forward. But these results show that the company is still trying to get its sea legs.
Yeah, so does that imply that only Tesla really has escape velocity in this industry right now? Because Rivian seems relatively far along. You did mention Ford, but that's obviously a different mix.
Yeah, I think Tesla is the clear potential winner here. They have the production, they have the scale with Austin, with the gigafactories. Ultimately, traditional auto's in a tough spot.
While I do agree with Munster's sentiment here, I think the guy is as guilty of understatement as I am with hyperbole. Munster believes that Tesla probably the clear winner. This guy knows Tesla has won the decade. Same general message, slightly different delivery. And as for Legacy Automotive, again, Munster was pretty delicate in how he pointed out what I would describe as them being completely and utterly fucked.
And I think we're going to see that in the weeks and years to come, is it's just very difficult to build electric cars. This narrative that just because car companies have built cars for a long time, therefore they're going to be successful, I think misses a point generally. And so I'm very optimistic related to Tesla. I think there's a $2,500 stock long term. A lot of controversy around that.
Interesting comments from Munster here. While I agree $2,500 is definitely in Tesla's future, that'd be about a $2.5 trillion market cap. The fact that Munster caveats that not only with long term and then also points out that it's a very controversial opinion really tells you a lot about where his head's at. I respect Munster, but I believe that he's a little bit concerned about being laughed out of his industry by his colleagues on Wall Street, and I also don't believe that Gene is seeing the full picture. I understand Gene's perspective, but I would challenge Munster to muster up the courage, find his nuts, do some numbers, and really tell me, 2,500, that's the long-term future of Tesla, a $2.5 trillion market cap, that's it? I understand Munster is a lot more skeptical on autonomy and the Tesla bot, but he does see the company relatively clearly, but I think he's missing something very important here. Don't know what it is. Maybe in his mind he's like, well, Apple's about $2.5 trillion. Okay, that's the maximum size Tesla gets to. I just kind of find it a little bit strange that Munster's getting stuck on this number. Again, it sounds super bullish coming from a Wall Street stock analyst talking about Tesla at $2,500 over the long term. But my question is, when Tesla hits $2,500, a lot sooner than Munster expects, what does the future look like at that point? Is Munster's default position be ultra conservative, assume nothing, discount everything that isn't already happening? Because $2,500 is going to look like an absolute fucking joke in just a few years' time. And at this point in time, Munster thinks it's actually a very controversial and bullish call. Let's see what happens. Keeping in mind, of course, that Munster has pointed out that Tesla is a religion and or a cult, and therefore I guess I must be one of the cult leaders, delivering my daily sermons, full of nothing but delusion and hyperbole, having done zero numbers and not really understanding what I'm talking about. Plenty of respect for Munster, but at the same time, I think he's getting a little bit concerned too much about being laughed out of his industry by colleagues on Wall Street, and isn't quite willing to take that leap of faith and go, hang on, what if? What if?
But I think that they ultimately are best positioned for that escape velocity. And just to put some context into escape velocity, I talked about those pre-order numbers. We also track their lead times on their products for their cars, and they're pushing 9 to 12 months. Rivian is 4 to 6 months, so you have a much longer lead time. That's a sign that consumers want their products. Another piece that Tesla has is that their average Model Y and Model 3 is about $58,000. The average price of a Rivian is $80,000, and similar for other electric car companies. And to really hit that, you have to have production and you have to have a price point that consumers want. And so I think that it ultimately bodes well for Tesla over the long term.
Agreed. And speaking of Tesla and wait times, so here we are over on the Tesla website on the Model 3 order page. Quote, estimated delivery October to December 2022. Hey, that's not too bad. We're in August now. August, September, October, November, December. Okay, 2 to 4 months, not bad. So let's put our order in. Now, I don't want the rear wheel drive. Not quite enough range there. I don't want the performance. I don't need to go that fast. I want the long range like everyone else. Wait, what? I can't click. Available in 2023. What? It appears that Tesla is no longer taking orders in long range. In fact, it appears that the wait times for this Model 3 must have blown out so far that Tesla's like, fuck that. Now, I could be wrong here, but probably not. Why would a company stop customers from ordering? Why would you do that? Well, actually, I kind of know the answer to that as well. You do that when your wait times are absolutely fucking ludicrous. You've done the math and go, hang on, people are already going to be waiting 6+ months. That's into next year. We've got an EV tax credit just around the corner. More on that in a moment. You know what? Probably not the best idea to allow people to continue to order these things. After all, if they put an order in and they're going to be waiting that long, not a good look. So fuck them. Can't even order the thing anymore. This is an extremely bullish signal. Tesla has made this decision from a position of strength. This indicates that they are literally the polar opposite of desperate for orders. They have more than they can deal with. Abundance. I wonder if this could possibly have anything to do with the breaking news that the US House of Representatives has officially passed the $430 billion Inflation Induction. I just want to make sure everybody got that, despite the gaslighting in the name. This is an Inflation Induction Act, not an Inflation Reduction Act. Oh, let's spend more money to reduce inflation. So, the Inflation Induction Act has officially been passed by the US House of Representatives, and yes, it includes a $7,500 EV tax credit. Once this is signed into law by everybody's favorite dementia patient, the EV credit goes into effect on January 1st, 2023, next year, a few months away. 2023. January 1st, 2023. Why is that ringing a bell? Available in 2023. Wait, I think I got it. Ready? Tinfoil hat on. Tesla knows that their demand is already absurd. Tesla knows they're going to be forced to massively increase prices. And Tesla's realized that if they continue to allow customers to order this vehicle today at today's current prices, wait times are going to blow out beyond a year. Just not reasonable. So instead, Tesla's going to wait and wait and wait, figure out their pricing adjustments, massively increase the price of all of their products, including the Model 3 long range, and then resume taking orders with a significantly higher price point, not because they're trying to customers over, but because that is the only way to ensure wait times do not become any more absurd than they already are. I mean, you really do have to feel for Tesla, the poor company here. They're just forced to massively increase prices once again because the government's pissing away money unnecessarily. The EV transition's happening. We're already at the tipping point. Completely unnecessary. But hey, as a Tesla investor, I'll take it. And well, the poor company just has to jack up prices and make huge amounts of money because, well, their hand has been forced. Don't blame Tesla for the wait times and don't blame Tesla for the massive price increases. Blame the Inflation Induction Act. As I said, as a Tesla investor, I'll take it. I mean, many additional billions of dollars in pure profit per year. I mean, hey, I won't say no to it, but I do just want to point out that this spending is not only unnecessary, but will actually be counterproductive in terms of inflation. I'm not even a US taxpayer and I'm pissed about this waste of resources. So I think the main takeaway from this is governments are going to government, aka piss away taxpayer money inefficiently, in fact, completely wastefully and counterproductively. No surprise there. And poor old Tesla is going to be forced to massively increase their prices and print billions of dollars of additional profits, not because they wanted to, but because they literally have no choice. What a tough situation. This is an incredibly bullish signal from Tesla. The fact that they're no longer taking orders really speaks volumes to the strength of the situation they find themselves in. Of course, I'm looking forward to hearing some of the tinfoil hat theories from the self-hating, basement-dwelling adult virgins who collectively identify as members of Tesla Q. I'm not sure what they're going to come up with to explain this one. Oh, the factory is broken, they can't make the cars, that's why they stopped the orders. Something along those lines. But outside of people who are suffering from delusions and or brain damage, I think it's pretty evident. This is a big swinging dick moment from Tesla. They've made this decision from a position of extreme strength. It is a hugely bullish signal for demand and future profitability. I saw this one coming a mile away. I've covered it in previous videos, and here we are, folks. The first step, temporarily stop taking new orders for the Model 3 long range. The next step is a massive price hike. But hey, don't blame Tesla. They're not the ones trying to induce inflation with this bill, are they? Hope you guys and girls have enjoyed the video. And lastly, don't forget you can support the channel by joining Patreon with the card in the corner or the link at the pinned comment. You'll unlock loads of exclusive content, plenty of off-topic rants, as well as a lot of Tesla-centric stuff and plenty of deep dives. And of course, up-to-date instant access to my Tesla stock price targets out over the next decade, which make Gene Munster's call of a $2,500 price target for Tesla stock over the long term look like a joke. I'm not sure who'll be laughing in the future, but if I were a betting man, ain't gonna be Gene. So, see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.